Hello and welcome to the Ask Assaad show. I'm Michael Gaines and glad you are joining us today as we continue our conversations, bringing you insight out from experts both here at NOV and around the world. And we are so glad that you're joining us as we have a very special conversation today with a duo that joined us recently this year and has given us the opportunity to speak with them again, the Spears brothers. So looking forward to today's conversation and diving in, talking about 2020 and, of course, looking ahead to 2021 as well. So before we dive in, going to go ahead and bring in Shelby Dumaine to talk about a little bit of programming notes, but also about how you can be a part of today's program as well. So, hey, Shelby, good to see you.
Hey, Michael, it's great to see you as well. And I'm so excited about today's guests. I know they're one of my favorite resources on the energy industry as a whole. So I'm really excited for our audiences to get to hear a little bit from them today. And on that note, if you have a question for our guests, or as always, for Assaad, there's a couple different ways you can reach out to us and get those questions answered. The first and probably the easiest way is simply by commenting below. So on this actual post in this live, if you add in a comment, then I'm in there looking the entire show, gathering those comments, and we're going to try to get some of them answered, as many as we can before we run out of time. And then after the show, if you have more questions, or even if you want to let us know an idea for a future show that you would like to see, there's also a few different ways you can do that. So the first is you can email us. That email is askassad@nov.com. So we check that daily. So we'll get your message if you send it there. And then the other way is you can actually give us a call. So we're going to have the number up on the screen, but it's country code +1 346 223 4799. So those are a couple of different ways that you can reach out to us. And I want to make a note. If you have, like I said, if you have a comment, post it at any time. Even if it's not a question, if you just want to let us know what you think about any of the topics we're discussing, then we would love to feature that on the show as well and bring you in and make you part of the conversation. And lastly, before I hand it back to you, Michael, the last thing I wanted to note is if you ever wanted to binge past episodes, for example, our guests today, we've actually had them on before. If you wanted to see that episode or any of our other past ones, you can view them at nov.com/live. So that's where we have all of our past podcasts and shows, and you can check them out there. And let us know if you have any questions on past ones as well.
I mean, if you've got to be stuck inside, forget new movie releases. Why not get caught up on market analysis and insight with your friendly Assaad Mahana, right? So
absolutely.
Great. All right. Well, thanks, Shelby. Good to see you. All right. So as we discussed, and as I just mentioned, we are going to be having a special guest today. But before we get to that, want to bring in our own Assaad Mahana, NOV's Director of Business Strategy, who happens to be joining us from his home turf in Lebanon. So, Assaad, thanks for spending the time with us. Hope your travels were well, and good to see you.
Good to see you too, Michael. I'm glad I'm able to connect. If the connection gets a little choppy, you'll know why. But so great to carry on with the show, even from the Middle East. And I guess it comes well timed because while in Lebanon, we're going to have some discussions about the Middle East too.
Right, absolutely. So no, good to hear. So I know we have had opportunity to see many things happening in the energy markets, and of course we've got a pair of experts among experts that are going to be bringing us some analysis. But I know there was one item on particular that we were looking to talk about briefly in our kind of review segment here, and I think that was some of the news coming out of OPEC.
We did have some people reach out asking what the latest was on that front. Last show we talked about the OPEC Plus, which is the OPEC and Russia together talk through whether or not they're going to extend the production cuts in 2021. The original plan was for production to ramp up starting January by a significant 2 million barrels a day, which is part of easing the original if you remember, Michael, in April, the 9.7 million that OPEC Plus decided to take away from the market, which helped quite a bit, really bring some sort of balance to the supply and demand. That 9.7 eased up to 7.7 closer to August, which gave a bit more bit more supply to the market. But as Asian markets kind of started returning to activity, recovering from the pandemic slowly, that addition went somewhat unnoticed. But now we're talking about another perhaps wave. Several countries are struggling again. So the activity is really not returning to normal. So a decision to return to somewhat of a normal production from OPEC Plus would affect everybody, would add quite a bit of surplus into the market. So what they ended up deciding, and the decision was supposed to be out early last week, but talks ended up extending into the rest of the week, and we got a decision that starting January, OPEC Plus will increase their production by 500,000 barrels instead of the 2 million, mostly coming from the UAE, which is a happy medium, I guess, from the original plan. And we'll see going forward, once the first quarter is done, what that decision will end up, whether to carry on with just that or even more. So as you can see, the pandemic's still taking a toll on worldwide demand. Economies are still struggling to react. We talked a while ago about the automotive industry and how the stocks or the performance of companies like General Motors, Ford, and Chrysler have performed in Q3 2020, and an increase of 31% in their sales for that quarter was an early indication of a intent to go back into the roads, go back into driving to work. We have yet to see that entirely really become tangible, but hopefully it's a longer term indication of people starting to move around.
Right. Yep. No. And certainly worth continuing to keep eyes on. So I know we want to go ahead and introduce our guest today. As I mentioned, and as you know as well, Assaad had great feedback and great conversation, and that's with John and Richard Spears with Spears and Associates. So guys, good to see you. Thanks for joining us today.
It was way easier to do it from Tulsa than to go to Lebanon with Assaad.
Yeah, I was going to ask if you all decided to buddy up with Assaad going to Lebanon, but maybe
we'll go anywhere with him.
Plenty of space on the airplane. I tell you that. Lots of empty seats.
Yeah, my brother doesn't let me fly business class anymore, so I have to sit in the very, very back.
Next year,
I don't want to go.
Yeah. Good. Yeah, good to be here. Thanks so much for the invite.
Yeah, no, great to have you back. I mean, this was we talked just a few months ago. It just so happens actually we talked about Beirut back then, but today we're talking a bit in a different tone as things start perhaps looking a bit brighter for the coming year. But before we get into that, maybe you guys, I know you just went through your drilling production outlook for 2021, which is a very well anticipated report. I know we use it in several corners of our organization. Give us a little bit of what you saw there.
Well, yeah, in summary, and we were putting those numbers together just as OPEC was meeting last week. And so we were trying to get ahead of what their decision might be. And I think we were pretty close in thinking that they'd do a gradual increase, which would leave oil prices in the mid $40 range for WTI and in the upper 40s for Brent. So, using that as our guide, we expect to see activity in pretty much all around the world begin to recover from where it is today. The recovery has already underway here in the U.S. We've seen rig activity jump 25% or so from the low point in August. The recovery is beginning to happen in South America. Other parts of the world are still sort of finding a bottom, but I think they're close to that bottom now. So over the balance of next year, then I think we'll see rig activity begin to improve and really improving in a lot of different places. So that's the good part of the news. I think that year to year.
What's the bad part?
Yeah, the bad part is the year to year comparisons will still look bad because 2020 on average will be higher than 2021. But from where we are today, I think the movement is up and to the right. So
if you look at the oil field equipment and service market, so
Yes.
NOV participates in that
Right,
market,
yeah.
Schlumberger in that market, NESR in that market,
right,
and you look at where those dollars are generated, or so where's the customer?
right.
You can actually take the,
Mm-hmm.
let's call it this coming year, the global market for oil field equipment and services is going to be about $170 billion.
Okay, to drill and complete wells. Yeah.
Yeah, and
Okay.
and also artificial lift. So you
Okay.
put that in there, and the capex part, like NOV would build rigs.
Sure.
And you look at where those dollars are geographically around the world.
Right.
You take Latin America,
Mm-hmm.
and Latin America is 10% of that market. So just take
10% of the
that,
global piece. Okay.
put that in Latin America.
Right.
But then the rest of the world,
Okay.
North America as a group,
Yeah.
Middle East, Asia as a group,
Right.
and then Europe, Africa, Russia as a group,
Yeah.
a third, a third, a third.
Roughly speaking. Okay.
They're all about the same size.
Okay.
In these boom years that we have in the U.S.,
Mhm.
it'll make the North American
sure.
piece balloon up.
Right.
But in a year like we're going into,
Yeah.
it's pretty evenly distributed. Latin America is always 10%.
Yeah.
But it's a third, a third, a third. So that's how important
Right.
Middle East, Asia, and Middle East specifically is.
Yeah, good point there. Right. So, improving things. And, one of the things that I think is, been clear is that we've seen a real pullback in drilling activity in the Middle East over the course of 2020. So the early part of the year, the folks at Baker Hughes were counting 420, 430 rigs working in the region. And today that number sits closer to 240.
And
So-
that change happened.
Yeah, right from the middle of the year on. So, there is a bit of a difference in the behavior that we've come to expect from operators in the Middle East, because, boy, in years past, drilling programs stayed very steady, irregardless of where oil prices were going. Right, in the 2015 and 16 cycle, prices fell, but rig count and drilling programs pretty much stayed locked in. That's been different this time around.
I sit on the boards of some oil field service companies. They're all private, not public.
Yeah.
But these global business units, during a year like we are having right now, you had all of the immediate calamity occur in the U.S. and Canadian markets.
Yeah.
You had the South American markets fall apart very quickly too. But one of the blessings of the year was that in this March, April, May, June timeframe
Of 2020.
of this year, the Middle East stayed where it was. It was this beacon of hope. It was a stable area.
Yeah.
Where from the board perspective and the management perspective, we didn't have to worry about that area.
Right.
While the whole rest of the world was falling apart.
Right.
So we got the rest of the world, fixed or right sized or
Yeah. And then you turn the calendar page.
and now that
right.
it's the Middle East turn.
Yeah.
But that's actually okay, because we'd like it to be like the old days, but it's not. Right. Anyway, we've rambled too much.
No, I guess just on that, it's an interesting point. You're right. The Middle East took a while to kind of catch on and react to. But what makes the Middle East resilient, or maybe not be so reactive in previous downturns, but not this one?
Yeah. So, right. We've got the national oil companies which dominate the activity in the Middle East, behaving a lot more like their American and European brethren, and emphasizing shareholder returns or dividend payments. And at a time when prices are weak, cutting capex so that they can live within cash flow. So I think that's been an important part of the new behavior that we've seen.
It's Saudi Aramco's commitment to their shareholders to send how many dollars in dividend payments?
$19 billion a quarter.
A quarter
is dividend payments. So again, U.S. operators are under pressure to improve returns to shareholders. Middle East, same way, really. And again, in the past, it might have been acceptable or worthy to run deficits in order to keep drilling programs up. But these days, everybody wants to be sensitive to where cash flow is and not run negative on your on where the money's coming from.
So this was the first year we got to see that behavior.
Yes, right. And I think that'll probably be a feature going forward. Now, I don't think that we'll see price drops like 2020 has seen, but I think in terms of the mentality of operators regarding how much work they should be doing, what they should be doing in terms of exploration field development, that'll be key.
So one of the items that comes to mind is, we were talking about, and I think I've read some similar analysis about the commitment to quarterly dividend commitments. So as we're talking about kind of that quarterly mindset, I know one of the major things that Richard and John that you guys do, as well as I know Assaad is looking ahead, especially as we move into what many people, possibly a present company included, is looking forward to, which is 2021. But as you're doing that, especially with an eye on the first quarter, as we start coming into that space, and of course rounding out the fourth quarter, what does that look like to you now that we're looking ahead? I know there's a lot of optimism, but certainly some cautious optimism, I think, is the word I've learned to love.
Well, Assaad touched on this in his discussion of the OPEC meeting, because one of the things OPEC and OPEC Plus have had to wrestle with, or have been wrestling with, is that the Eastern Hemisphere markets, so China and so forth, have actually recovered pretty well from the pandemic. Their economies are up and running. Energy demand is rising there, and so much of the supply from the Middle East flows to those markets. So yes, operators in the Middle East have cut rigs, but when you look at it for 2021 and beyond, demand in their primary storage markets will be growing. So I think many of the projects that rigs had been working on have been delayed, but not canceled. And so I think that, I'm not sure if it'll happen in the first quarter of 2021 or quite how soon in the year it might happen, but I think we'll begin to see rigs filter back to work. So the rigs that have been operating in the Middle East, I think will begin to return to work, because again, that oil has a market, and those fields will need to be developed in order to supply the growth, not only for 2021, but what's expected to occur beyond that too. So.
That said, the right sizing of the industry been pretty dramatic so far. And the oilfield service and equipment sector has done a yeoman's job. They've been the best job about immediately responding, right sizing, meaning lay off a whole bunch of people. Such that now, as we go into 2021, no matter where you are on the planet, there's probably each quarter more people hired than fired on the service company side. Now that adjustment in headcount still going on with the oil companies, because they are not quite as quick on the brake or on the gas pedal as the service companies have to be. So on the oil company side, I still see an erosion in headcount all over the planet. Exxon being top of mind here. On the service company side, I think there's more hiring than there is firing.
So those, so we're a bit of a mixed bag when it comes to some of those, looking at the specific actions that individual operators, individual service companies might take.
To echo that, I don't know if I mentioned that before. I spent my earlier part of my career in the Middle East, between Dubai and Saudi Arabia, really mostly in Saudi. And that was the period between 2010, 2013, and activity back then was really blown and going. And one thing about Saudi's production, I know we were working on lots of projects that were all about increasing Saudi's capacity to produce, not its actual production, to 15 million barrels a day. And that was when they were producing 10 million barrels a day. So a lot a lot of their production seems to be a lot more strategic than and less volatile than the shale space that's really reacting to supply and demand and oil price. And I think you guys probably know this too, that the fact that depletion rates in the Middle East are a lot lower than a shale well depletion rate, which, comparing 7% depletion over the first year on a oil well in the Middle East compared to over 50% maybe in shale, makes that lag to kind of play a big role. Do you guys feel that that's a player in how less volatile that market is?
Well, yeah, absolutely. In fact, I think, one of the things that we need to be mindful of as we think about the future is that here in the U.S., operators have, for several years, as they've developed these shale plays, chased volume growth rather than profits, right? And for a 3 or 4 year time frame, we're raising production at a compounded rate of 20% or more. Now, I think operators here in the U.S. are looking at it and saying, we need to pull back and not grow production as fast, and maybe only increase our shale output at a maximum 10% or year over year. So if that's the case, then the U.S. will no longer be the swing producer as it largely was during most of the last 5-6 years, right?
Last 10 almost.
Yeah. So that will make it even more important for operators in the Middle East, the ones that you were talking about, that have a cushion, right? Because that, I think, is going to play in a more important role as time goes by in terms of being able to bring on the barrels that the market might want to use. And so I think some of the relative power, as it were, within the global market will return to the Middle East, so long as shale production in the U.S., any growth remains relatively muted from where we are today. Yeah.
So it's been interesting as we've been talking, and I've got the ability to sort of peruse a little bit in some of the comments. I'm curious, Shelby, how has the feedback and some of the comments been from folks watching?
We've been really good. So we got one actually from Gerald, and he was talking about takeovers from the oil companies leading to a lot of job loss. So that was one comment. If y'all could speak to that. That's interesting. Yeah, a lot of, because I know, and that's a good one, because I think we talked about consolidation. I mean, M&A is no stranger. Interestingly, right, for 2020, I would have thought it would have been a distant word, but it certainly has come in spades. I mean, do you find that those transactions have played a role, and if so, in a positive way, in a constructive way, or just more in a maybe survival type of approach?
Sitting there from the board perspective,
yes,
you've got a whole bunch of constituents that you think about when you are trying to steer the bus,
right,
from the board's point of view, because there's a school of thought that a corporation exists solely for the benefit of its shareholders, but that's not valid, because you can benefit the shareholders and absolutely screw the employees. And how about the environment as well?
Right.
So you've really got 5 or 6 or 7 different things from a board perspective that you've got to consider when you think about a decision that you're going to make. So clearly 2020 and this coming year are going to be those years where everybody, the oil companies and the service companies, are incentivized to combine. Because you got to have a bigger balance sheet. You got to have bigger. Just bigger is actually quite literally going to be better.
Spread your fixed costs over a larger production base. Yeah, all that makes sense.
Yeah, and how about this? attempt to have a market cap, whether you're public or private,
right,
that's somewhere in the $5 to $10 billion range.
Right.
Because the day of the $500 million market cap company, whether it's private or public, those are a dinosaur. You've got to be great big. In a case like that, you put these companies together, first thing that's going to happen is one of the management teams is going to leave
Right.
because you don't need 2 CFOs and you don't need 2 regional.
And a lot of the back office, duplication. Yep.
And it doesn't matter whether you're talking oil company or service company, because the same thing applies. Then you go back and you are confronted with, you are obligated to return money to a shareholder in the form of a dividend, because that's what they want now. And that modifies all sorts of behavior with respect to how aggressively you drill a well or pay down debt or any of those issues.
Yeah. The only thing I'd add to that, Rich, is that that the fact that mergers are taking place is probably a positive sign. That says that people now feel confident enough about what the future might hold that they're willing to make these kind of bets and go ahead and merge. So, boy, when nobody knows what's going on, that indecision just freezes all activity, right? Yeah. So the fact that there are mergers, clearly there's upsides and downsides for lots of different groups when that happens. But I think the fact that it's happening is an indication that there's more confidence amongst operators and amongst service companies so that they can feel better about the plans they're making. So
I'm going to be looking for the following keyword in mergers, and that is transformative. I'm looking for transformative mergers. And let's, on the service company side, for example,
yes,
I'm not looking for, say, a directional drilling company to go buy another directional drilling company
just for the purpose of rationalizing capacity.
No,
that's
because
not transformative.
That's never been a very good idea. Just be bigger at one thing. It can work, but it's going to be transformation. That I'm going to be looking for. So on the service company side,
right,
and then on the oil company side.
So hopefully you'll be seeing a bit more goodwill on companies' balance sheets, more value being brought into play rather than just synergies due to cost efficiencies.
That would be true.
Yeah.
Now, some have taken this consolidation with open arms and said, yes, we need more. Others are saying it's a bit too slow. Which side are you on?
Well, so, boy, we keep a list of transactions that occur. We update it each week, and during the second and third quarters, there was hardly any need to update it each week. There was so little going on, and I think that just reflected, in part, the fact that the valuation of companies was so wide. There was such a wide gap between two parties' value of a company. The bid-ask spread was just too great.
Yeah, how do you figure what that is?
Yeah, so the seller wanted some number that the buyer thought was absolutely crazy. So, but as activity began to recover, as plans began to be made, then you can begin to get more realistic, and the valuations get closer together, and then that they get close enough, and the deal gets done. So. So I'm not surprised. I just don't think you can rush the consolidation process at a time like what we've seen. When demand drops 30% from one month to the next, that's just too much of a
change. And they had to fix the debt issue first, because there's no way that two companies, each with a lot of debt, can go together. It just means they have twice as much debt. So the first step had to be fix the balance sheet. And maybe that's convert your debt to a new equity holder distribution, but fix your debt, go through bankruptcy, negotiate your balance sheet things. Then you have the ability to talk about a deal.
That's true. I would say that the deals that we have seen, at least here in the U.S. on the operator side, have generally been between companies that have had fairly strong balance sheets, and the ones that are still waiting to be bought are the ones that are still working through that deleveraging process. So you can only go so fast, and I think we'll see that pace of merging continue to grow as the next 12 months.
2021 and 22 are going to be banner years for putting companies together, oil companies, service companies.
That must be why all our investment banker friends are so happy these
days. They're back.
They're busy.
Sure. Wait, there goes one now.
Hey, Richard, John. So we talked a little bit about what's happened, what to kind of expect in the coming year, and what kind of portion the Middle East takes on of the overall projected spend for 2021. I guess in closing, for me at least, what's the Middle East has for years been the heart of oil and gas. Why do you guys think it matters even more going forward?
Well, OPEC Plus supplies 50% roughly of the world's oil. The Middle East is a third almost of the total. So I know that there are a lot of different forecasts out there as to what's going to happen to demand growth over time. When will it peak, and so forth. But until that day happens, and even beyond, the Middle East is going to be a substantial supplier of crude. And probably the last man standing, right? So
well, yeah, and the thing that's going on in parallel, a trend that started in earnest maybe 5 years ago, was it's a hard word to say, and I can spell it, but I can't say it. The de-slumberization of the Middle East, which for decades, for generations, and then the word Schlumberger, but it's for years, for decades, for generations, Schlumberger and Halliburton and Baker Hughes were the ones who did all the well-related work in the Middle East. But as the very clever folks who run oil companies in the region have looked and said, how is it that you Americans and Canadians are able to have a cost per well, per foot of oil, per whatever that's so low in how can we do that here?
Sure.
And you've seen this development of the independent service structure all throughout the Middle East now. With the net result, it lowers the cost of drilling and completing and producing a well in the Middle East.
Absolutely.
So here's an entire region led by Saudi Arabia that's working really hard on its cost structure. And therefore, they'll be able to do even more for a longer period of time.
Right. Yeah. So you marry that combination of excellent reserves with an improving cost structure. So it's a tough combination to beat.
Yeah, that's right.
And I think you're touching on a great point here. That we always thought the shale industry succeeded because of the entrepreneurial aspect of how successful a drilling engineer wants to make that well in comparison to the other 20,000 wells that they're drilling that year. But I think we're seeing more of that in the Middle East, where they're looking across the international markets and saying, why not us? And they're integrating and they're doing different business models, and they're putting stuff together that make more sense, employing technology, and getting to that point as well. So yeah, I agree. Great point made there.
Right. The secret sauce for the oil and gas business is the service industry, and the equipment suppliers to it as well. So that allows a lot of things to get done, and you just need to have a good one domestically to work with. So that's benefited North America markets for years and years.
And if I could just add, we have 300 corporate clients. Saudi Aramco is one of our corporate clients, and they're one of our larger clients. They don't hire us to look at how things are done in the Middle East. They hire us to look at how things are done in the U.S. Lessons learned, take them home, deploy.
There you go. Yep.
So we take a lot of credit for the way Saudi
that was a sly way of saying, we hear you. Well, that's the secret sauce there. I know the secret sauce to a great conversation certainly is a good feedback loop. So with that, I want to go ahead and bring in Shelby Domain to give us some of the comments and questions that have come in while we've been having our conversation. So Shelby, what do you have for us?
I have a couple really great questions, but before I get to those, I did want to mention another comment that we got from Gerald, and he agreed. He said that service companies are definitely going to be major players here as things start to change and as we see that. And then as far as questions, we did get a couple, like I mentioned. So this first one comes from Salim Sator, and I'll have it here on the screen for those watching at home. And he was wondering if you have any insight about North Africa.
Ooh, North African market. Yeah. So Yeah, that's a gas prone area for the most part. Of course, we have Libya, who is its own example there. I don't see a lot of change in the activity levels in generally speaking in North Africa over the coming year. Anyway, there's just some issues around the profits that oil companies are allowed to return home, and they're just sort of in Egypt. They're in the down part of a longer cycle that's growing, but they're just sort of stagnant right now. So I think the North African market won't see much change over the coming year. And for Africa as a whole, we have activity down about 10% next year. What's interesting in the African market is the divestiture going on by the major oil companies. So they're looking around the world and saying, where do I have high cost fields, high cost to operate, high cost to develop? Where do I have high emissions operations? Because I want to get out of the emissions business too, right? So I think that's part of the reason why we see so much activity in Africa and North Africa sort of on pause right now, is that there's as an area that's got a fairly high level of potential divestiture going on, and it's just tough to put fresh money in until a deal gets done.
Mm-hmm. Mm-hmm. Absolutely, thank you for that. I didn't know if I'd be kind of putting you on your toes by asking about a different region than we were talking about today. So
these guys, they're robots. They're ready to go. So don't hold back anything.
Absolutely, as always incredibly impressed. So this next question, we actually get a lot of comments in here anytime we do a live from people, looking for work, looking to maybe enter the industry for the first time or come back to it after a while. And so on their behalf, I wanted to ask you, looking as we, go into 2021, do you have any advice for those people? Like I said, either starting off for the first time in oil and gas or energy, or maybe coming back to it and looking for work?
There's a massive trend that has been going on for the last 3 or 4 years and was completed this year. So what's your age?
66 now.
And my next birthday is 65.
Yeah.
So I'm the far younger brother. But one of the things that I noticed was that this was the year that the boomers were finally eliminated from the oil and gas industry, almost as a whole.
Yeah.
There was finally flush out us old guys.
Right.
We didn't used to be the old guys, but apparently we are now.
Yeah.
When you look around, the typical age of a CEO is 40. So, 25 years younger than you and me.
So what folks have called the great crew change, right? As this wave of folks move aside. And, we all know that employment took a hit in the industry back in the 80s, right? There wasn't much new hiring then. So there's a real gap. And I think some of this change that you're talking about is real. I mean, there should be an opportunity as activity begins to recover, and as folks just leave the scene, there'll be some spots open up for sure. Yeah.
So I'm a fan of the service sector. Always have been. Always will be. As being a place where somebody who is prone to movement, just get stuff done. That's such a great place to work, and to have the mindset that you're going to work at an individual opportunity for maybe 5 years.
Yeah.
So, if you gear your whole world, your life, your spending, your saving that way, hey, I've got a job, I got 5 years, and then I'm going to be out of work for another year, or I'm going to do part-time stuff during that time.
Yeah.
I think the service sector has always been that way and always will be that way.
So we'll never repeal the cyclical nature of the industry. So that is an issue, and that will attract a certain kind of person and repel a certain kind of person, right?
That's right.
I think the other thing, though, if I were to give advice to folks looking at the industry as one, as a career or for a job move or whatnot, I think it's very important that folks be mindful of the fact that it's very important for the health of their career that they stay abreast of technology. This is a very mature industry, but boy, think about how much things have changed over the past 5 years or 10 years in terms of how operations get done and whatnot. Technology is a big piece of that. So that's, I think, the other thing. You can't just stop learning because now you're out of college. You've got to stay on top of those changes that are going to come about.
Mm-hmm.
And we usually say to that, I mean, we happen to be in the oil and gas business or the production of hydrocarbons, but really what we're building from a technology standpoint, or what we're designing as an industry, is extremely heavy machinery that moves with extreme precision over and over again for decades. And that's a problem you're going to have almost in any industry, especially energy related. So, you come into this industry, that's the type of challenges you're going to see, and that's the type of solutions you're going to work on. So,
here's a growth area in the industry.
Mm-hmm.
Forever, this industry has been one where if you started a company
mm-hmm.
that required, a tool,
right?
I'm holding a mouse, but if you required a tool, you built the factory and you owned it yourself, and that factory built the tools for you, and you then deployed those tools into the field.
Sure.
But if you look at every other industry,
mm-hmm.
hardly anybody owns their own factory. They buy, if you're in the car company, you buy the doors from somebody and the headlights from somebody, and you bring them all to some location.
Microchips, everything.
And you screw them together somewhere else.
Yeah. Mm-hmm.
But the oil industry, not that way.
Yeah.
So the growth part of the oil industry
mm-hmm.
is, this thing is underway. It's just now starting.
Right.
But it's where you have a set of OEM manufacturers that build, how about this, packers.
Mm-hmm.
And those packers then are branded to, 5 different packer companies, because is the technology of some of these old standard tools any different? Not really.
Yeah.
So let's manufacture that. Let's have a central manufacturing. Think of it as a back office or OEM manufacturing.
Open your mind up to ways to drive cost out of the process. That's one of them. Yeah.
And that's the growth area.
Yeah.
All of those of us who've been in the industry for 40 years, it's hard for us to think that way.
Yeah.
Give me new thinking that allows me to do that. Figure out how you can do that.
Learn.
Man, that gets into the business model stuff, which, as always, Assaad knows that's just catnip for me. Like I'll take that all day long, because I mean, honestly, it's like you say. I mean, it's what the old business adage: you innovate or die, right? I mean, you have to find ways of adapting, find ways of thriving, regardless of the height of the waves that are bashing against the bow, right?
Right. Absolutely.
I like to say innovation is invention times commercialization. You can't come up with a cool product and not get it into the market properly.
We're going to steal that. We're going to steal that and use it tomorrow.
Trademark already. We got it copyrighted. So
yeah. But that's okay. That's okay.
Absolutely. And I wanted to mention too, real quick, speaking about that, the crew change that you mentioned. I know I hear a lot, millennials kind of discounted as, well, they're still in college or they're not here yet. And I like to use as a benchmark myself. The year I was born is typically considered the final year of millennials being born. And I've been in the industry already for now several years. So I always like to remind people, especially when I'm talking about, in my world, social media and how the energy industry fits in there is like y'all mentioned, we're in it. And I won't speak for all millennials, but I know I'm really excited about energy. So I love hearing, kind of encouragement for more of us to get excited about it. But anyways, going back to the audience questions, I know we're running low on time, but I want to try to squeeze in maybe one or two more if we can. Let's see. Amit Patel was asking, how do you evaluate India in terms of investment?
Oh boy, yeah.
Oh, can I take this one?
Yeah, sure.
One of our companies
Yeah.
is making an investment in India right now.
Okay, good.
So I view it very favorably.
And is there a reason why? Is it a function of just the general business climate?
Satisfactory quality products
Yeah.
and a low cost of manufacturing
Okay.
and a reliable, eager workforce.
So that would clearly benefit if you're an equipment manufacturer, something like that.
Yeah. Plus also,
Yeah.
I'm 35 years now into an oil company that we have in India.
Yeah.
And it's and it's fine. It
Right.
works. It works great. It's got some screwy things that happen when the monkeys descend from the hills.
No,
But apart from that,
yeah.
it works fine.
Yeah. That's that the India as a country accounts for something like half the rigs that Baker Hughes counts in the Asia Pacific market. So it's a huge player.
I think we're
dominated by
one of them.
dominated by the state government there. And so there's some negotiating. As an operator, you have to negotiate, the role of the government in the economy. But yeah, it seems to be a pretty stable market going forward. So I think it will.
I gotta say, I am looking forward to a book that you at some point might be writing about investing internationally. I'd really like to read something like that.
With a quote from Assaad Mahana, I hear.
Yes.
And put it down, right?
Because of the glue on the cover.
Yeah, no, but that's true. No, that's really. I mean, these have been some really good questions. Certainly, great insight. That I think that's one of the reasons we're actually going to retitle the name of the show. Insight Out, because I think that's really what folks are looking for, to have a lot of that perspective and ideas and insight, and help get that out so folks can really gain better perspective and really understand, these things that are happening to us as we're all kind of in the same car driving down the road, so to speak. What are the things that we are seeing passing by, and what is it? How does it work, and why does it matter? So certainly, you two have been made a massive mark in the industry, and I've said it before, I'll say it again. I mean, it's some of the first material that I ever was able to consume, and helped me even understand, what the industry was, coming from a completely unrelated industry to a certain degree. So certainly appreciate the insight and perspective. So and of course, Assaad is always a willing participant for someone like an incessant question asker like myself to knock his door down and also provide that perspective. So appreciate it. So been speaking with John and Richard Spears with Spears and Associates, and been talking about 2020, the Middle East, and what everyone wants, 2021. So John, Richard, thanks so much for sharing your insight today.
Thank you very much.
Our pleasure.
All right, Assaad. Well, I know that you are going to be wrapping things up. See, it's almost 5 p.m. in Lebanon, so you're getting close to quitting time, but certainly the energy space never quits. So look forward to continuing getting some insight and perspective from you. I know that we're going to be taking a break later in the year, but we'll be jumping in full force, especially as the new year rolls around.
Yeah, that's actually a good point. And you brought up the change of kind of the name of the show. No more asking Assaad. We're gonna be you and me are gonna be the ones asking this time.
Sure.
So yes, you're right. It's gonna be Insight Out, and then that gives us a chance to do a bit of revamp, and hopefully, I'm looking forward to doing this in person at some point. As security and safety allows. So great to have people like the Spears brothers on the show, and thank you for all the hard work.
Absolutely. Well, thank you for a great 2020, Assaad. Appreciate your help and insight, as well as Shelby and the rest of our production team. Certainly couldn't do it without you all. And as Shelby likes to remind me, as always, certainly appreciate all of our viewers and those that have joined us today. So thank you for your questions. If we weren't able to get to your question today, don't worry, you can still get an answer from us, and we'll certainly try to engage the Spears brothers as well. If you just want to send an email to askassaad@nov.com, we'd be happy to get that question answered for you. So on behalf of all of us here at NOV, thanks for watching and for listening, and we'll talk to you again next time.